Vulnerability is not a situation, it's a risk. People could touch it. They started realizing that they're increasingly exposed to risks linked to the climate that are going to change their lives.
I'm Raj Kumar, and you're in the Devex Book Club. It's a place where we explore world-changing ideas through conversations with today's leading authors. Today's is a sponsored episode, and we're going to learn about insurance. Insurance has long been a privilege of the wealthy, but what if it could protect everyone? In Middle Classes Cannot Be Left Behind, Garance Wattez-Richard shares her bold mission to revolutionize financial protection. As the CEO of AXA EssentiALL, she's bringing insurance to millions who've never had it before. From empowering women entrepreneurs to protecting farmers against climate disasters, her innovations are proving inclusive insurance isn't just possible, it's actually profitable. I have to say, I was interested. Of course, I've known you for a while. I know your work. You are an unlikely insurance executive. You lead, one of the world's biggest insurance companies, and you're focused on some of these issues in low and middle income countries. But how did you get there? What's your life story? I've known you for so long, but I don't actually know the whole backstory. Can we hear about that before we talk more about your book?
It's quite amazing because you have a red thread in your life, whether you either want it or not, I think, or whether you acknowledge it or not, to a certain extent. And sometimes it appears in the weirdest moments. And so when we saw each other in New York for the launch of the book in English with Queen Maxima, this guy comes up to me and he was vaguely familiar, but I didn't have my glasses, whatever. And he's like, I'm the guy. I'm like one of your cousin's best friends, Luis. Don't you remember? We used to basically smoke weed and party in Brown when we were 18. Don't you remember?
And is that where you went to college? You went to Brown University?
No, my cousin went to Brown. And so he remembered. And I thought it was so interesting because at the time, I didn't know where my life was going to take me. And this guy is now in the Latin American Development Bank. And it goes on because then I get this email from one of my aunts. And she's like, oh, but Luis wrote to me and told me that he had seen you. And, I hadn't really followed your career so much, but it's so nice that you're able to do this. So, there's this ongoing thread of things that you can't imagine. And so I say this when you ask me about my, let's make it a bit more exciting, or kind of accentuated life story, that I kind of fell into development, so to speak, like Obelix in the magic cauldron, right? And the magic potion. And so I was born in Senegal to parents who worked for UNDP. Well, I'm sorry, but I was born on UN Day. So that's very classy, 24th of October, okay? But then I went down a sort of more traditional route, studying sort of finance and economics. And then, yes, my sort of first job was at the European Commission, doing the infamous stage, that lasts for 6 months. And already there I was in a developmental DG. The guy that was there was a guy that had a really big budget at the time, which was 12 million euros. And he resigned that morning, burnout or whatever it is, depression. And they had no one to take care of his budget, which was about creating infrastructure-based projects and financing them to bring together the Israeli and the Palestinian communities. But I was 22 and they were so can you take care of financing all of that? And it was quite amazing because it was organizing, building schools between Bethlehem, between different towns to bring the children together. It was that kind of thing. So after that, I thought, okay, I have to stay in this world. So I did go to the EBRD, where I worked in the in Bureau of the Chief Economist, who at the time was Nick Stern, the same Stern of the Stern Report. Mm-hmm. And there I kind of thought, this is really boring me out of my mind. This is too slow and too bureaucratic. So I went and I worked for a company called London Economics. And London Economics was set up by two people, Nick Stern and John Kay. And they set up this consultancy when monopolies were destroyed or re-regulated into becoming competition in the UK. And then I went on to work for, again, consulting, but strategy consulting. I was only put on projects that took place in Algeria or in, again, the emerging world. So when you come out of all that, there's this red thread becoming apparent, right?
You were literally born into it. Born on UN Day. I mean,
Yeah.
in Senegal.
So,
Yeah.
and then I went to the AXA group to actually head external comms. And then I heard that they were thinking of doing microinsurance. And I thought, I'm going to do that. It was an obvious move, and I think that what really helped me grow it was that I had been in the company for a long time. I've been doing this since before I had wrinkles. So it's been 8 years. It took a very long time. But yeah, there we are where we are today. And I think it's because of the red thread.
You say that it was obvious. I guess it was obvious for your career, for your red thread, but maybe not obvious for a big company, a big insurance company, right? I mean, these are to say, okay, we're going to look at the people living in the middle classes in low and middle income countries, and we're going to provide to millions of people this small scale insurance products because we think that actually is the missing piece for becoming a member of the middle class or staying a member of the middle class. That insight is, first of all, not something everybody has. And then, having the gumption or the courage as a big corporate to say, well, yeah, that's a market for us. Like, are you seeing a broader insurance industry move towards serving these kinds of customers and these kinds of markets?
Well, we weren't first movers at all. We were late adopters. Far from me the idea of ever saying AXA was the first to move on microinsurance. We were the last, or amongst the last in the global players. I think the first were people like Allianz, IA, a lot in Asia, a lot in Africa, even in Latin America, to be honest, or regional players or local players, right? But they moved on what was traditionally called microinsurance, which is why I decided not to call our team or our business AXA Microinsurance, for example, but emerging customers, which, has changed again, but, big corporates like to change. So we called it AXA Emerging Customers because microinsurance was a very specific type of insurance. It followed the explosion of microfinance, the Mohamed Yunus, building of small loans, because the bigger loans in the traditional banks the people needed to tick a certain amount of boxes that they couldn't tick. Stability of an address, having knowledge of having an ID card, that kind of thing, right? So microfinance started growing 20 years about before microinsurance, or 10 years at least. And then microinsurance latched on, right? Which is basically credit life insurance attached to a small loan. And that we were late adopters about, very late. But deciding to go beyond that and either enhance credit life and add to it health insurance or protection insurance, or if you're borrowing $200 to buy a tractor, that we actually insure the tractor, or that we insure that out of the 100 you've borrowed, you still owe 30, but you're either dead or temporarily or permanently invalidated or incapacitated. So you can't reimburse the 30 remaining. But once you reimburse that, which basically, makes the financial institution very sort of, feel warm and fuzzy inside, what about the family? Right? How do they see things coming when their main bread earner has stopped earning the bread? So, we started enhancing that and sort of doubling the sum reimbursed, or even tripling it to some extent, or giving cash that we call hospicash to people who said we're being hospitalized without asking for really any proof, apart from a note saying they've been in hospital. So not asking for bills, because the secret also of this type of insurance is that it has to be extremely simple. So if you start asking for proof and papers, it's never going to happen, right? So what we said is we just need proof that you've been in the hospital, and it's indemnity-based. So we don't go and reimburse the 113.6. We'll say, if you're in a hospital in the Northwest, it's 100. Southwest, so we know it's less expensive, it's 80, et cetera, et cetera. So that's where we're first movers. And there you're asking, so why? Why did you decide? Well, I think, first of all, we have CEOs, and deputy CEOs and leaders overall that, to be honest, are visionary, one. Two, and this has continued to be Thomas Burrell's thinking. His way of thinking is the following. And in a way, what I really, really like, amongst other things with him, is that what you see is what you get. So in the beginning, he said, yes, it's good that we're creating social impact and including people who were not so far. Yes, of course. But beyond that, what he's driven by is to say, if we don't start addressing risks that we don't understand, either because we've never focused on them before or because they're new, catnats, cyber, if we continue being how we've always been, which is basing the future on the past because we work with data. Then we take the risk, if you caricature or you really pull the thread, of becoming exclusion machines. And so, of becoming runoff machines. So how, do you keep therefore fighting for the saturated tip of the iceberg? Or do you look at the market and you say, you know what, we're talking about an addressable market of 4.5 billion. How can we imagine remaining a leader? It's Paul Paulson who said, at the glory of his years, he said, any company who wants to become or remain a leader in the 21st century cannot do so, will not be able to do so, unless they understand the math.
Are you looking for the inside story on what's happening at organisations like the World Bank, USAID or the Gates Foundation? Then you need to be reading Devex Pro. I'm Jessica Abrahams and I'm the editor of Devex Pro. Pro is Devex's premium news subscription where our expert reporters and analysts take you beyond the headlines, deep into the trends and institutions shaping the $200 billion aid industry. As well as all our news, you'll get access to conversations with global development leaders, resources to help you grow in your career, and a subscriber-only newsletter full of insider news and tidbits. See for yourself by getting a free trial today at devex.com/pro.
That makes sense as a long-term vision, but are you able to make money doing this even now? Like in the short run, is this something where you're losing money, but you're trying to build a market, or can you really do it even now?
Well, I like that question because, it was the first question that came to everybody's mind. First, I was told that everybody was going to fraud. So the perception was here again, poor people fraud. Then we said, it's small premiums. So how are you going to be profitable to a certain extent? Now, that's linked to volume. This is a high volume game. That's for sure. If we did it, only on a few hundred people, and today we cover, including Europe, 17.5 million people, okay? If we did it on a low volume, probably we wouldn't be profitable. But we are profitable. Why would we be less profitable than traditional insurance? Because by definition, we're not going to use the same journeys. And that was the difficulty, right? We're not going to use the same journeys. So therefore, we're not going to have the same fixed costs or variable costs. We're not going to use the same products. We're going to redesign them, etc., etc. And you know better than I do that innovation, usually it's one parameter that changes, maybe two, but not five. Mm-hmm. And therefore, because the addressable market was there, because distribution channels were extremely hungry for insurance that was adapted to their modest customers, the barriers we faced, the headwinds, were not external. They were all internal, which I think I had told you this once before, which was very stressful for me. Because when I was invited to our group board, the day before I didn't sleep and I thought, these people are so much smarter than me. Oh my God. Okay. And then I thought, what are they going to ask me? They're going to ask me two things, I think. How can we help? And what are your challenges? I can't answer my challenges are internal. That would put my CEO in a very difficult position vis-a-vis his board members, right? But then how when you don't sleep, you end up having a eureka at one point because you're like so tired that you become smart. I thought, but no, this is great because if I didn't have internal headwinds, it would mean that I wasn't really innovating and creating a market. If the company was waiting for me with open arms, then what did that mean in terms of when I say I'm creating a market? Not really. The IT is there, the operations are there, the products are there. What are you talking about? So that's what it was internally. When you asked me how it was internally, it was internal barriers, but with the support of the top. That's how I think we managed. And yes, so to answer your question, yes, we're profitable.
I wonder, listening to you and talking about that trajectory, how microfinance came first, and then that caused people to have this eureka to say, well, what about microinsurance? We can layer it on top to protect our microfinance investments, and then we can take it further from there. Microfinance had its heyday, and then there's been a lot of research and a lot of critique that says, it's actually not this panacea. Maybe it's important in its own way, but it's not going to actually solve development challenges on its own. Is there a similar danger or risk here with insurance? Like, as I said at the beginning, I'm very excited by insurance. I keep meeting people like you who get me excited by it. Is there a chance maybe we're thinking of it as too much of a solve? Or is there a legitimate argument that actually this is kind of a missing puzzle piece, and once you have it, you have all the other things too, but once you have it, you actually can make an enormous difference? How do you think about it?
I think you're not going to like my answer because I'm going to say both. Of course, there are risks. They're very strong risks. One risk is selling insurance that people don't know they have. That's one. So embedded in credit cards without informing them. Like you and me, I'm sure you have lots of insurance you have no idea about. Okay, that's one. The second risk is not realizing how important it is to do what we say. So if we're going to pay a claim, pay it quick, pay it immediately, pay it this and that. So it's the whole of the value chain where we need to be exaggerated in how well we do it, right? So that's a risk. But there's also the risk of imposing, in a way, insurance where it's not needed. So, for example, there is no point in adding insurance to very, very small loans. However much some financial institutions make credit life insurance mandatory, in many a case, it should not exist because the loan is too small. If you borrow $20 or $50, you're going to pay it back. The people in the group you're in will pay it back. What some financial institutions do, and insurers, is that they add insurance because, in a way, because interest rates are capped on microfinance, and they run their model and they realize that the risk profile of their clients is such that their interest rate should be higher, okay? They compensate that interest rate risk with an insurance premium, knowing there will never be a claim. So that we're very careful of. So, for example, we do not put credit life insurance on nano loans. That's one. But then the other, so that's one example, so that you insure things that don't need to be insured. Then, so I can take another example on health. There are many countries in which, honestly, the public system, and I'm not only talking about emerging, but some emerging countries where the public system the public hospitals are actually not bad. It's just a question of waiting time. But when it comes to your basic kind of needs, we shouldn't be offering health insurance for basic needs, because they're taken into account by the public system. So we're offering to cover a risk that doesn't really exist also on health. But then the fourth challenge is that we crowd out something that works. So, like if it ain't broke, don't fix it. So in many circumstances, you will have communities who know that they're going to be faced with this risk. So death, for example. And this is not actually that funny what I'm going to say. It happens only once, which sounds like a really stupid remark. It's less stupid than it seems because we know it's going to happen, right? So people have gotten organized around funeral costs. They just have. They know that with their immediate family, they're going to contribute every time to the funeral cost. So a lot of insurers in East Africa, and not AXA, not that we couldn't have made the mistake, but we're just not present in East Africa. And East Africa created a lot of funeral products. The conclusion of several studies was that the only impact this had was to grow the price of funerals. That's it. It didn't protect people more. They were ready. What they're not ready for is things where they have to make regular payments. It's not a one-off, and they couldn't have planned it. Chronic diseases, cancer, diabetes, hypertension, what have you, where they have to help their neighbor, but they hadn't planned it. And it's ongoing and it's recurring. That we're useful for. But we have to really be careful of what it is we're looking to cover and if something doesn't already exist. Now, that's a risk.
This sounds a lot like a series of risks that regulators need to be on top of as opposed to just the industry. And maybe it's the same story with microfinance, where in its heyday, it was seen as such a big solution to everything. It wasn't sufficiently regulated, so you had a lot of abuse in terms of interest rates. Is that the case? Like, are you seeing, since insurance is coming out of these markets, is regulation getting smarter? Is it moving at the pace that you want to move at?
It really is. So it's like with everything, there's teething, right? So they really are. A lot of emerging markets are now defining extremely formally their financial inclusion strategies. And our fight, and so regulating it, our fight is twofold. One, very often, insurance is not part of that. In the same way that in the first level of all the SDGs, insurance is not mentioned once. Zero. In the third level, we're mentioned once, right? In the same way, insurance is not thought of initially in the financial inclusion strategies. And so that's where we are doing everything we can to lobby for it to make sense, because The insurance regulator needs to speak with the health regulator, needs to speak with the digital telecoms regulator and the banking regulator. Because if not, the telecoms regulator is going to say, sorry, you can't pay for insurance or financial services with your minutes or your top-up, which is a big problem. Huh? Or the banking regulator will say, I agree with them because if you manage to pay with your minutes, then you're creating another currency. And that currency is minutes. So no, sorry, you can't do it, right? So they need to all speak together. So that's our first challenge. Our second fight or challenge is that we need to introduce pragmatism. Because, I'm extremely, and I say this with no fake, brown nosing, as we say, I'm extremely admirative of emerging market regulators in insurance because they're really on the path. But let me give you an example. There's a country I won't name that has put in place a specific microinsurance regulation. Several countries have. Egypt, Nigeria, India, several countries have. But this one, they went a bit further and they said, you can file under a microinsurance license for products that are microinsurance products. They call microinsurance. This will entitle you to have a smaller level of reserves in front. You know how you need to reserve when you're selling insurance to be able to then pay the claims, etc. So we entitle you to put less money, to freeze less money, let's say in front of it, to be more agile. And then they said, but there is a cap on distribution commission, which cannot go beyond, I think it was between 10 and 15%. What was the consequence? Is that because no regulator agreed to distribute with that level of commission, no insurer filed under the microinsurance license. Because 10 to 15% distribution commission is too low. So it's teething, but it's getting there.
Are you interested in the intersection of business and social impact? Do you want to know how corporate sustainability, ESG, impact investing, and more can contribute to development finance? My name is Adva Saldinger. I'm a senior reporter at Devex, and I've been reporting on these issues for nearly a decade. I'm the author of Devex Invested, our free weekly newsletter dedicated to development finance. Every Tuesday, we explore how companies, investors, and market mechanisms are reshaping the world of development finance. Visit devex.com/newsletters and join us on Tuesdays.
Maybe one way we end is to talk about, we started with your trajectory and how you always knew you were kind of born into a development career. Now you're in insurance, but it's still development, And I guess I'd like you to make the case a little bit more of why insurance should be seen as such a core development activity. You say it's not in the SDGs. What are people missing when it comes to insurance that you could be an insurance executive like you and you're still a global development professional?
I think, maybe there are a few things. There's this perception that insurance is like a black box, right? And that once you put your finger in it, you never know really what's going to come out. And is it not too expensive? And insurers don't pay. And, there's always these exceptions and exclusions. So people don't turn to it maybe because it's perceived as too sophisticated in inverted commas. And to be honest, when I looked a bit at the history of insurance as a sector, but also of banking and credit and savings, etc., all of these sectors were initially created for exactly the people we've been talking about. For those that are too rich to be poor and too poor to be rich, because the rich people didn't need insurers. They were like landowners or asset owners, even if they had a problem, if they had frequent risks that came about, like a small fire or whatever, they had the money. And if it was bigger, then they dealt with it in a very different way, right? And the very poor, they just looked at tomorrow morning as a horizon. So it was really created for this population, insurance and credit, etc. And then increasingly, we're industries that became increasingly sophisticated and covered increasingly sophisticated risks, and then created in financial vehicles, and then bundled them together, and then started really addressing only the top. So as this went on in this industry, then increasingly people learned to do without, right? I think that why it's one and the same to work in insurance and to be a development professional, and here we're only focusing on the emerging world, whereas I think there's also an issue in the mature, but it's another story, is that, and I think to a certain extent, it's probably climate change that changed a little bit the mindset. Because all of a sudden, this risk landscape that's always been key and very present and evolving continued to evolve, because there's an evolving risk landscape where actually there are not only more risks, but they're growing more intense. But people could touch it. They started realizing that they're increasingly exposed to risks linked to the climate that are going to change their lives. And I think to a certain extent, that opened the way to understanding the knowledge of the rest of insurance. For this population, for the population that development with a big D aims to pull out of modesty, vulnerability, poverty, etc. Because again, vulnerability is not a situation, it's a risk. And so when people actually started putting a word on it, they started thinking, but okay, so then how do I work around this? And it doesn't surprise me that someone like Sophie Sirten from SIGAP, who's been in this sort of both development but financial services, right, intersection, all of a sudden said, but why are we not addressing how insurance for every other financial service that drives to financial inclusion and then overall digital and health inclusion, education inclusion, etc., that reduces the risk of every single other one, credit and savings and payment and transfers and etc. So she's putting light on it. But I think up until then, and when the SDGs were written, I mean, yes, climate was already a very understood risk and phenomena, but not to the extent that it had reached maybe an understanding that there was something that could be immediately done and actually was quite pragmatic. Also, so that's my first conviction. My second conviction is digital, is that it's so complicated to reach volumes of populations needed to make protecting them profitable in a way that's aligned with businesses, right? With digital, we're now able to do that. And so we've pushed awareness and education and sensitivity to the topic and been able to put our money where our mouth is, where we actually have been able to protect them. Third and final is that I really am of the conviction that the SDGs have done something quite extraordinary that that their parents didn't do, so to speak, and I hope that their children will do even more, is that they created more proximity between the public and the private sectors. And you cannot put together insurance and development if it's not at one point based on cooperation between the public and the private sectors in the developing world. So I would say those are the three reasons why maybe today more than before, they are becoming intimately linked.
And when you think about kind of where we are with the SDGs, so far behind, when you think about the broader political wins against foreign assistance, against traditional approaches, what's exciting about this book, about this philosophy, is that there is another tool which is beginning to be used. I mean, like you said, you've got a real business around this that's profitable today, but the gap is enormous, and there's such an opportunity if these kinds of products under the right regulations can get rolled out and actually serve people and actually address those vulnerabilities, those risks that come up in their life, in day-to-day life. It can have a huge impact in the world. And that's an exciting thing at a time when we need some excitement about what's possible.
But let me leave you with one number that you're going to like. There's a report that says the following. For every extra percentage point of insurance penetration, and insurance penetration, it's very weirdly calculated. It's not the number of people who have insurance over the number of people total in the population. That would be too simple. Insurance population is calculated as premiums over GDP. Do not get me started on why, but that's the way it's calculated, okay? For every single percentage of new penetration of insurance in the developing world, SDGs are further implemented by 5.8% in the P&C world. So in asset protection as opposed to people protection. I think the number on people protection is for every 1% of further insurance penetration, SDGs are furthered by 1.8 or 2.1. It's less, which is normal because it's people protection, so it's health and death and all those kind of things.
Particularly at a time when climate is going to really supercharge a lot of these risks, having these markets in insurance grow, reach more people, use digital tools, actually make payments, work under a more visionary regulatory authority. I think it's an exciting thing. And I thank you for bringing this to this audience and for writing this book. And it's been great to talk to you.
No, thank you. And thank you for highlighting it and for being such a pleasurable person to speak with, and for being also a visionary, because I'm not sure everybody is convinced as much as you are by insurance, but thanks to you, we'll get there. Thank you very much.
That was Garance Wattez-Richard of AXA EssentiALL and author of Middle Classes Cannot Be Left Behind. You can follow her on social at Garance-Wattez-Richard. Thank you for joining. The Devex Book Club is produced by Haley Mundeva with special assistance from Margaret Richardson. If you want to know more about these topics, don't forget to subscribe to the Devex Newswire at the link in the comments, where you'll get the day's top global development breaking news, analysis, and opinion. Until then, do good out there, and thanks for joining.